Morning, everyone. Welcome to the morning kappa at 8 on a Wednesday. I'm here to present the midweek futures traders technical brief. So this table is one which is very familiar to us, but if we look at the performance of the current table, some of the data that is showed here is reflected the government lockdown, whereby some of the official numbers are not available, and the markets are basically running on momentum which were existence in the previous week, and also on some of the development in the AI space. So I think I need to point out the US markets for the indices, the Dow Jones, the Nasdaq, and the S&P 500, whereby if we look at the current setup, it is still neutral. And this is due to the fact that, although new highs have been achieved, we have seen that there is some kind of resistance that has formed at the top side of this range. And the news that has been driving the indices here have been one which is taken with a pinch of salt due to the fact that markets have not been able to sustain big gains and have retraced since then. So I think for Nikkei, this is one which has been broken out from a range, and this is mainly due to the news that they have got a possible new prime minister in lady, of course, and this is giving some good vibes to the indices in the Japan market. So otherwise, we have seen that due to the uncertainty, gold and silver continue to be very much in the positive setup, and we have seen them rising to very new highs. So for copper, we'll touch a little bit on that later, and this is also a pretty positive development for this particular product. So I'll move on to the palm oil. Basically, palm oil has been trading in a range too, right? And mostly neutral in the sense of market patterns. And basically, crude oil prices have also traded in tandem with soybean prices. And expectations of lower stocks in the coming months are basically cushioning the downside pressure. So recommendation is that on dips, this is certainly levels to be watched. The 4,300 levels are ones which is very important to palm oil. Okay, so this data I want to put a disclaimer here. This is the previous week's data. This is September 23rd. Why I'm showing this is to basically help us understand that before the government lockdown, these were the numbers, and we have been basing on these numbers to basically gauge where the directions of the major players are heading to. So without the latest data, we can only guess from the movement of prices. So we will also basically follow up on a product which we have promoted last week. And the levels that we were recommending was a 60.70, and there was a plunge which went slightly lower than the 60.70 reference price which we spoke about. And the markets are now trading here at above 62. So there's actually some floating gains here. And we'll touch a little bit on that in a while. And basically, the main driver for this crude oil is that the inventory built up, whereby the OPEC Plus decision to continue returning additional supply to the market. But despite of this lingering concern, prices have found support at 61.0, and this is likely attributed to geopolitical factors. So this was the template from the previous week, but I've updated it to show that the current reference price at 60.70 is still valid. As mentioned just now, we are trading above the 62 level. In fact, when this was prepared. 62.13 was the level that was being traded at that moment. So for the potential profit from where the reference price is maintained to be 63.50, which will give us a value of 280. But of course, if you enter today at 62.13, then of course the value will be less than the 280 as shown here. And potential loss is at 120 in value. And also, we're going to look back at copper too. Copper basically hit the price targets that we mentioned last week. So that was a profitable guide that we mentioned about. But looking at the previous week's data from CFTC, basically, if we look at what the major players are doing, is that they are pretty neutral on their positions. But the product that is mentioned here, copper, although it's neutral, but we believe that there has been some movement due to the fact that there has been some short covering due to some factors which have been driving up prices. And the news that has been basically moving copper to higher ground is basically the disruption in Indonesia and also Chile, which has a few persistent shortage concern. And the last month's accident at the Indonesian's Grasberg mine, the operator has indicated that full production is unlikely to resume until early 2027. That would have taken a big chunk out of the production capacity that flows into the market. So due to this fact, I think a lot of players who are using copper as their basic material for their product, their final product, is basically buying ahead of this shortage. In Chile too, copper has fell nearly 10% year on year in August, and this is the steepest drop since 2023, after a late July earthquake has halted production in some of the mines in Chile. So because of the consistent momentum that has built up in copper, so we will basically make another guide on copper for this morning. And both existing profile and short-term setup is positive. Current price is at 5.0965, and the reference price is 5.05, which means that we are probably seeing a little bit of retracement before an upside is going to be seen. So the potential profit price here is 5.15, giving a value of $250, and also a loss price of below 4.95. That is a value of a loss of 250. So that's all from me. I'll pass on to Joseph. Thank you so much.
Right. Morning, everyone. Joseph here. Thank you, Vincent, for the weekly futures technical update. Looking at the Hang Seng index on Monday before they close for the holiday, I can see that the Hang Seng experienced a mild profit taking. Also taking cue from yesterday night US market at the HXC, which is the tracking the Chinese stock list at the US market. We can see that this HXC have a strong selling pressure yesterday night as well. Hence, this morning, the Hong Kong market may have a bit of pullback. Nevertheless, on the downside, support remains at 25,700 and also a 25,000 point level. Before it hits the support level, 20 days and also the 50 days moving average, both will buffer the selling pressure. So overall, at this juncture, technical setup remains bullish so far for the Hang Seng index. So if you want to have some exposure on the Hong Kong market, right, I'll still be looking at a few stocks that we have been talking, the Tencent, Alibaba, GDS, SMIC, PetroChina, Sino Biopharma, and CATL, right? So those that I have not highlighted, you can actually take a look as well. So in the event that you miss the webinar that we had talked about the Hong Kong market about 1 week ago. You can play back the webinar at the Facebook Morning Kappa group. Right, and as for today, I'll be looking at ASMPT, stock code 522, where the stock have breached past the 86 Hong Kong dollar resistance, heading towards 93 and followed by 100. And downside support is at 78 Hong Kong dollar. Now, SMPT is a semiconductor related counter. Then on another education stocks named China New Higher Education, stock code 2001. On last week, break past 1 Hong Kong dollar 25 cents. So the breakout, right? This 2001 will be climbing towards 1 Hong Kong dollar 50 cents and followed by 1 Hong Kong dollar 65 cents. Downside support is 1 Hong Kong dollar 25 cents. Okay. A quick look at the US market, right? Sentiment remain risk on the US market, as we can see that the index have been trending above the 20 days moving average. And right now, so this is the US watch list that we are seeing over here. At the two stocks that we have posted last week, which is firstly the MEDC, right? The name is Ramaco Resources. Now, this counter actually relate in the rare earth mining, right? In the US, right? What we can see right now is that after the breakout, the stocks have continued to move upwards towards hitting our R1 at 40 US dollar and going to try test out the 44 R2 higher resistance. Okay, and okay, right. Sorry about that. Yeah. Just have right. The next US stock that we'll be looking at is Rocket Lab, which have a break past the 50 US dollar level that we have mentioned, right? Right now it's heading towards the higher resistance at 64. Okay. Just now my screen have actually missed out. I just want to repeat that these two Hong Kong stock that we have published our report. Firstly, the ASMPT stock code 522. They have actually staged a breakout. And second stocks that we actually have mentioned, which is the China New Higher Education 2001, right? And so you can actually take a look at the report on these two levels. Beside these two stocks, right? These are the watch lists that we have prepared, and nothing much change over here. I'll prefer to look at a big cap stock at this juncture on the Hong Kong market. So apart from the tech counter or internet counters, of course, you may aware that the gold price have actually reached $4,000 per ounce, right? And in the China, right, there are few gold related counter as well that you can actually take a look, such as the 1818 Zhao Taifo, Zijin Mining, right? That's another class of stocks that you can actually look at, right? And so for FKRI, we still keep a bullish bias with our stop loss unchanged at 1535. Another commodities that will be interested will be the FCPO. Before we head into the 10th of the month on the MPOB data, right? What we do see is that the FCPO have moved higher yesterday night, Tuesday sessions, eyeing to test the 4,005. So far, we still keep a bearish bias on the FCPO until it break past the 4,006. So if you want to learn a bit more about the FCPO, I just want to do a bit of marketing here that tonight, right, Aiman is going to conduct sessions on the FCPO, you can actually look out for the sessions at the registration link at the morning kappa at 8 afterwards. Yeah. As for Malaysia stocks, firstly, we'll be looking at Tanjung Motor, right? The stock have underwent a fresh positive price actions yesterday on the back of higher volume. So over here, you can see that the bullish momentum is picking up pace again. If Tanjung Motor have a breakout at 81 cents, it will climb to 92 and followed by 1 ringgit. On the Life Water, which is a Sabah-based company, also eyeing to break past 1 ringgit mark. So if breakout happen, Life Water will be heading towards 1 ringgit 4 cent and followed by 1 ringgit 8 cents. A little bit of additional information. Our research at this juncture have a buy call on the Tanjung Motor. So on the technical side of things, we do see that Tanjung Motor also a pending breakout right now. Then on, as we know, the Sabah state elections have dissolved yesterday. I think yesterday, 2 days ago, right? So we can look at one of the counter Live Water. At the same time, Live Water is also one of the small cap jewel stock that we actually mentioned during the May. Okay, I'll stop here and pass on the sessions to Alex on the overall market strategy. Thank you.
Okay, morning everyone. Thanks for dialing in to Morning Kappa at 8. Big shout out to my buddies Eugene and Jason if you're dialed in. Let me speak to you this morning, a quick one to summarize our 4Q25 market outlook. The report was published yesterday afternoon, so take a look at the details. But essentially, the outlook going forward remains very much a macro-inspired kind of storyboard. So our RHB Economics view on the outlook for US and global growth remains a relatively positive one. We're looking at US GDP growth for 1.5% this year and 2% next year. We are also so essentially the outlook here is steady as she goes, right? And I think what this means, this macro backdrop, what it means for Bursa is that we think that the positive pivot that the markets have shifted to ever since our last report on strategy in early August will likely continue going forward into 2026. We are seeing one, improved clarity on tariffs. Number two, as I mentioned earlier on, a relatively sanguine macro backdrop. Number three, the US has commenced its rate cutting cycle, and therefore we are looking for a softer dollar going forward. As you know, FBM KLCI is historically has been positively correlated to a stronger ringgit dollar. Also, we are seeing relative domestic political stability, and we also see the Madani government's continued commitment to reform, and we look forward to a positive budget announcement this Friday. And obviously, we are also seeing Bursa Malaysia suffer from record low foreign ownership levels that for the month of September has dipped below the 19% mark. We're also seeing continued domestic growth initiatives initiated by the government, and obviously Bursa Malaysia's laggard performance here today does mean that there's a possibility that the global dollar-based foreign portfolio funds may start to relook at laggard ASEAN emerging markets going forward. So I think right now, while the backdrop looks to be a relatively positive one, I would just want to highlight, a couple of potential risk areas here that investors need to be very cognizant of. Number one is slower than expected U.S. economic growth. While this is not the base case, if you look at what's happening in the U.S. right now, you don't have to look too far beyond turning on CNN to see that the U.S. Society as well as the economy is in a bit of a flux right now. Consumer confidence is hitting lower. Lots of turmoil in the market. The government is shut down for political reasons, and with all the stuff that the Trump administration has initiated beyond tariffs, which includes the DOGE cost-cutting initiatives on the federal government, the ICE clampdown on undocumented migrants will have an impact on the labor market. And we know that certainly we cannot rule out the risk of slower than expected U.S. economic growth, although this is not the base case, and we're just highlighting a risk. Second risk is the risk of U.S. financial markets undergoing a correction. If you look at the report, into the report, we have several PE band charts in there, focusing on the Dow, on the Nasdaq, on the S&P 500, and they're breaking, plus 2.5 standard deviations above the mean. And the U.S. financial markets are certainly, as we have said for the past quarter, at a bit of a disconnect with the reality on the ground. What with the U.S. consumer confidence heading south. In addition, we would also be looking at the possibility, again, not the base case, but a possibility of significantly weaker dollar going forward. And I think what this means for Bursa Malaysia for a weaker dollar is that the importers will benefit. So importers include consumer, auto, and also other beneficiaries include holders of issuers of dollar debt, and also companies that need to spend on dollar-denominated capex. The losers will unfortunately include the exporters that will include technology, rubber gloves, and nominally also basic materials, and nominally the plantations sector. So what should we do here? How should investors position themselves? Markets have, as I mentioned earlier on, pivoted up from low 1500s on the CI since the early part of August. And we're now at already at the 1620, 1630 kind of range, which is where our year-end and where we are forecasting the year-end index to end. And the consensus also has end 2025 KLCI target of around 1650 thereabouts. So what really should we be looking at, and how should investors be positioning ourselves? So I think right now, 4Q25 is likely going to pan out into a relatively tactical quarter. I think if you look at how the GLICS funds have performed in the first half of 2025, there doesn't seem to be much incentive for the markets to be significantly driven a lot higher than where we are, given that we are already at the mean. So I think markets are tracking fundamentals pretty well. What we need to look out for going forward is how sustainable the earnings growth picture looks like for corporate Malaysia going forward. So I think a couple of areas here for 2026 that we need to focus on, number one, Johor, Singapore Special Economic Zone, that seems to be the hot area still. We're also looking at a lot of macro developments in the Sarawak state. We are also continuing to be positive on construction, given that 2026 is the first year of the 13 Malaysia Plan. And to this end, we are also likely to see a lot of emphasis on renewable energy, water infrastructure, energy infrastructure, as well as focusing on themes that involve a weaker dollar and potentially slower US growth as a risk. So I think for Q25, it probably won't hurt to take some chips off the table in the short term to realize some gains. But I think the key priority here for investors is to continue positioning for 2026. And I think in terms of 2026, we would be looking at this level, we will be looking at some of the laggard names. If we look at figure 41 in our report, we have a list of stocks that we consider to be laggards, but for which we still have buy calls on. We are also, if the market rises higher from here, we would also then be looking at the lower liners, the second and third liners. That includes the small mid-cap names. And if you look at figure 45 in the report, we have a list of stocks in the small mid-cap space that we like. And of course, we would also continuously be looking at opportunities to accumulate domestic-centric stocks on weakness. And some of our top buys can be found in figure 46, not forgetting the high dividend yielders that we see in figure 47. And of course, if you believe in long-term de-dollarization trends, then it does look as though especially with the weaker dollar driving gold prices further up, China trimming its holdings of US T-bills, which means that China is probably looking at using repositioning into gold as a store of its reserves. And we think that the outlook, the medium to long term outlook for gold certainly looks to be relatively positive. So do look at some of our short-term technical analysis reports on COMEX Gold that you can find on reports written by Joseph's team. Okay, let me just stop here and pass the time to the next presenter, and have a great day ahead. Cheers.
All right, good morning, everyone. So today we have a company update on Binastra. So yesterday, Binastra announced that it secured a 305 million contract from a company called Bahru Stainless for a solar PV and battery energy storage system, which has a size of 65 megawatt for the solar PV system and about 200 megawatts for the battery energy storage system. So this is Binastra's first renewable energy related project under its green energy infrastructure arm called Binastra Green Energy. And this project is expected to take about 9 months, and in margin-wise, they expect it to be between 7 to 8%. And in terms of year-to-date job wins, the latest job has brought Binastra's FY26 job wins to 1.9 billion ringgit versus our 4 billion ringgit replenishment target. We view that the remaining 2.1 billion that Binastra has to finish to reach the 4 billion target is possible through multiple projects coming from Johor and potentially also some other upcoming potential RE projects in the pipeline. So all in, no changes to our earnings estimates given that the latest project is within our FY26 assumptions. But we do take the opportunity to revise our ESG score from 3 to 3.1% to reflect Binastra's involvement in ESG related projects, given that the latest job actually helps Bahru Stainless to reduce its energy cost by about 45 million ringgit per year. So with that, we arrive at the new target price of 2 ringgit at 60 9 cents from 254 cents. We continue to like the stock given that it's trading at about 15 times forward PE, which is still below the 16 to 17 times PE during the last construction upcycle back in 2017. So that's all from me, everyone. Thank you for joining in today for RFQ's Morning Kappa at 8. We will see you tomorrow at the same time and same place. Have a great day and take care.